So we've gone for this longest winning streak in a couple years. NASDAQ, is it really a surprise that tech is leading the way?
No, I don't think it's a surprise that tech is leading the way, especially on the heels of such a swift reduction in yields. What I think happened last week and what we're still seeing this week is a bit of a relief from a 3-month sell-off and the expectation that the Fed was not done. And now we're operating under the assumption that they are done and interpreting that as good news, that, OK, the pressure will come out a little bit. We won't have as much capital constriction. I don't think that is necessarily the right way to look at it.
So you don't think the market's getting you don't think the market's getting this right?
I don't think that a ferocious rally like this is durable, given where we still are and given the fact that even if they are done, the effects of it are not done. And even if they are done, they're going to hold it here for probably quite some time.
I mean, the effects of it, though, have sort of defied some sense of logic for a while.
Sure.
What if that continues? Because growth is good enough to make it continue.
That's possible. That would be the thing that busts my thesis, and I'd have to change my mind and tell you that, OK, you know what? I was wrong, and things are much more positive. Somehow we survived this, right? I think it has defied timing, maybe more than logic. There's been still just this waiting game of why hasn't it come through yet? Why haven't the normal things that usually happen after a tightening cycle happened yet? I still think it's yet, not never.
Weiss, are you going to order your T-shirt? You know, now it's on the back says, "I survived the great Fed tightening cycle of 2023."
No, I'm going to give Liz a lot of comfort here and agree with what she's saying. It hasn't defied logic, it's defied timing. So it's just a delayed reaction because there's so much pent-up savings, so much pent-up balance sheet, so to speak, from corporates, and we're seeing that depleted, definitely on the consumer side. So I still think this is a moment in time in terms of the rally. It's convincing, but take a look. The market's speaking. I'm looking at Deere down 2%. I'm looking at CAT continues to trade down.
Yeah, you're looking at the wrong stocks, though.
No, I'm looking at the right ones.
Wrong stocks.
And the ones in my portfolio.
The wrong ones.
So I have been adding exposure, but it's to the names that I believe are more durable and stand the test of time and are not dependent upon the economy.
That's my whole point.
For the success.
That's my whole point. I mean, I'm
glad I was able to make it in a more articulate fashion.
I say what I did because when I asked Liz, well, are you surprised that it's tech leading the way? Of course not.
No.
Why would you be surprised? Why, Jim, would you go out and buy industrial stocks like the ones that Weiss is talking about? Why would you buy energy ones, material ones, more cyclical ones that are more tied to what is undoubtedly a slowing economy when you could buy tech? You get growth and defense.
I'm very glad you asked because there's a distinct answer. Listen, I don't disagree with what you guys... What?
You wouldn't? Is that the answer?
No. No, I would. And there's a very, just give me a second here. Give me a little runway here, okay?
You got runway.
There's a timing question here. We all know it. What is the lagged effects of the Fed's rate tightening, and when is that going to hit? What we're missing, though, is for the last year and a half, now almost 2 years, these cyclical companies, these non-tech companies have been out-earning, and there have been tremendous cash flows that continue to pay down debt and now are buying back shares. And what I'm putting to you guys is the lagged effect is supposedly going to come up when debts mature and they have to be refinanced at much higher rates. What's being missed here is the degree to which balance sheets are being really, really cleaned up. I mean, you can look at cyclical stocks like General Motors. You can look like discretionary stocks like Wynn Casinos, the airlines. You can look at NXP Semiconductors today and how much they're paying down. These balance sheets are getting cleaned up, and it means that lagged effect that I hear you, the timing. You think it's a timing. That timing is way, way out there.